Do not trade if you don't know these two key elements I'm about to reveal to you guys, because if you do, you are most likely setting yourself up to failure. So let me ask you this question. Do you often find yourself in a situation where you've done your analysis, everything is confirmed, you set your take profit and your stop loss, and then you get stopped out by a tick and then price rallies into your take profit, or you get stopped out and price continues in the other direction? Trust me, I know that feeling of frustration. In the next 10 minutes, I show you exactly what you do wrong and what you can do to fix that. Sounds fair, right? So there are only two categories you can fit in. You either don't know how to determine your bias, or you don't know when to trade. And yes, I said that correctly, when to trade. I'll show you what I mean with that in a bit. Okay, for example, right here. We created all-time high, then we had a retracement down into this 1 hour fair value gap right here. Drop down into it, we had a market structure shift, and then a retracement down into, let's drop down into the 5 minute. Here's a market structure shift. Let's imagine you entered on the way down here, where price retraced down into this, in this 5 minute order block, or in this 5 minute fair value gap right here. Let me delete the 1 hour fair value gap. So you entered right here. Let's take this scenario for us, for example, okay? We had a market structure shift, a retracement down into this 5 minute fair value gap. And say, yeah, okay, you want a confirmation, okay. Price then continues higher, confirms this as an order block. You think to yourself, okay, everything's perfect. Now here's a 5 minute fair value gap, and this is your entry signal. You enter right here. Stop loss below this order block right here, or below here. This is also an order block. An order block is, according to ICT, in propulsion block. We have the confirmation. We waited for a signal. We entered, and then if your stop loss was right here, then you've been stopped out by a tick, and then what's price gonna do? Rallies to the upside and takes your take profit. Now you ask yourself, what did you do wrong in this scenario? You don't know when to enter. The most important thing, according to ICT, in trading is time. Time is the most important confidence you can have in a trade, okay? Let's go into greater detail. You entered right here at around 5:30 a.m. Okay, what is wrong about 5:30 a.m.? ICT recommends to always either trade within his ICT kill zones, which are, for example, London kill zone or New York AM kill zone, which is from London 2 to 5 a.m. or New York kill zone from 7 to 10 a.m. And if you trade outside of these kill zones, this is the first mistake you make, okay? Number one rule, don't trade outside of your kill zones. And what did you do wrong here? Here still at 5 a.m. You wanted to wait for the confirmation. Confirmation came a little bit later after 5 a.m. and you thought to yourself, okay, but my setup is looking pretty good. I mean, I have everything. We have the SMT, we have the market structure shift. Everything is in alignment. So yeah, time is not important. Wrong, okay? You see here, price retraces and stops you out. When do you get stopped out? At 5:55. And there comes the macro time window into play, okay? A macro time window is 10 minutes before the end of the hour to 10 minutes on top of the hour. That means, for example, from 5:50 to 6:10 a.m. These 20 minutes time window is a macro. What happened right here? Price stopped you out within that time window, and then the real move was revealed. Always consider time, and either you trade within that kill zone or you trade inside of a macro, okay? And I give about how good your setup is looking, or if you have SMT, if you have every confluence you might have except for time. If you don't have time as a confluence, you don't trade. Simply write that down on a piece of paper, stick it on your wall so you can see it every time before you go into a trade. And remember that, okay? That's the most important part. First time and then price. Second scenario that you can possibly end up in is you, for example, right here, okay? So we've been consolidating, which is actually pretty good because consolidation means, okay, price is engineering liquidity. So where was liquidity engineered? We engineered, or price, the algorithm engineered buy-side liquidity. We have these relatively equal highs right here, okay. But liquidity was also engineered down on the sell side too. So what do we wait for? Wait for time and price. Time, we are inside the 7:30 to 10 a.m. session kill zone. Time, tick. Price did in fact take out these relatively equal lows right here. And ICT says if there are relatively equal highs on the upside and on the downside. In other terms, if you have relatively equal highs and lows on either side and both of them are intact, you wait for one of them to get swept and then you target the other one. So we waited for time, waited for price to come in alignment. Price came in alignment right here, okay? Within the ICT kill zone, we took out these relatively equal lows now, and we are in all-time highs. So in all-time highs, we have always bullish buys. So you could have thought, okay, we are going to reverse to the upside and take out these relatively equal highs right here. What did you do wrong? You get stopped out and price continues to the downside, okay? So if you drop down into 1 minute chart, for example, you mark that low out, extend it to the right, and there you go. Swept a little bit here down in the pre-market IM session, but yeah, that's not too important. Actually, price sell side gets swept down here. Let's ignore these two candles right here, okay? Imagine price gets swept right here, okay? And we have this big bullish 1 minute candle, okay? You might think to yourself, oh yeah, okay, great. Now, this bullish candle is confirming that we were going now to the buy side. Generally, is nothing wrong about that. But what's wrong here is that your bias is just wrong, okay? Now the question arises, how do I find my bias? How do I find the correct bias? And how do I trade alignment with my bias, okay? So now the important thing with bias is, as I told you before, you always have to look for liquidity, okay? Now, if you have two pools of liquidity, one on the upside and one on the downside, you wait for one pool of liquidity to get swept, okay? This is step number one. Or actually, that's step number two, okay? Step number one is you go up to the higher time frame, okay? It's not enough to only analyze market structure on the intraday time frames, okay? You also have to consider the higher time frames and you have to determine your bias off of that higher time frame chart, like the daily or even more important, the weekly chart. Now, as I told you in the beginning, if you are trading in all-time highs, your bias remains bullish, but you have to consider where you are in that daily range, okay? Now, for example, that 1 minute chart I showed you was exactly here at the top. Now, you shouldn't want to trade around here. Why not? You are absolutely in a premium, okay? If we look at the daily chart, we have to find the discount arrays, the discount in that price range, okay? Now, if you want to trade this in this daily candle right here, we have to look for the discount arrays. Where is the discount array, okay? Now, let's imagine this is today and you want to find a trade. What you're going to do is you mark out higher time frames, so weekly or daily PD arrays that are discount PD arrays. For example, like this. This wick right here is a premium wick, but if price is above that PD array, then it becomes a discount array that we can use as a discount to support price and get to our target, okay? Now, let's drop down into the 1 minute chart again. So we have our daily high time frame bias, which is bullish, okay? Now what you want to do is you want to wait to come back down into a discount array, okay? This is really, really important. Now, time has to be in alignment with price. We are in a discount array. This is the premium daily wick that I showed you. We have to wait for time, which is this purple shaded box. Okay, this is just an indicator that shows me the PM session ICT kill zone, okay, which is from 1:30 to 4 p.m. So now price is in a discount array. We have still bullish buys because we are trading on all-time highs, okay. We trace down into this discount array, and now we can take our bullish signal. What could a bullish trade entry look like? Why is the highs and the lows? Lows are right here and right here. What could you do? As I told you in the beginning, we wait for one side to get taken, which is right here. This low gets taken in this specific time window, which is the PM session. So time, check. Now price has to come in alignment. We are, as I told you guys, in this discount array, and price is obviously getting supported by this daily discount array. So what you want to do is you look for the macro time window. As I told you guys, macro time windows are from 10 minutes before the top of the hour to 10 minutes after the top of the hour, okay? So we have a time window from 2:50 to 3:10. Now this is the macro time window. Look closer. What happened inside of this macro time window? We took out sell side liquidity and got supported from this daily premium wick, which act as a discount array. What you could have done is you wait for sell side to get swept right here. We are inside a macro. We have the market structure shift, and we have this fair value gap right here. You set your stop loss below the low and you aim for the high. This or this one right here, these relatively equal highs, okay? But for the sake of this discussion, we just take this buy side right here. And again, we have time and price in alignment. We have our entry signal. Bias is in alignment with time. And of course, we have a deeper retracement right here, but price got again supported off of this wick upper quadrant right here. We took out this minor buy side liquidity right here, had deeper retracements down again into this order block midpoint and got supported, and then we went to our targets. In conclusion, you can fit in two categories. If you find yourself in a situation oftentimes where you get stopped out by a tick and then price moves into your take profit, most likely what you are doing wrong is you have to wait for time. We wait for time, which is not a guarantee that your take profit gets it, but as we all know, trading is a game of chance, and we want the chance to be in our favor. So we'll wait for time, and as you can see, it works. Now, if you fit in the other category where you struggle to find the correct bias and you oftentimes get stopped out and price continues in the other direction, then you have to consider the bigger picture on the higher time frame. Okay, where are you in a range from premium to discount? What you don't want to do if you are bullish, you don't want to buy in a premium. Okay, you always want to buy in a discount. What is discount? For example, if we grade this price leg from here to down here, everything above this midpoint, this red line, is a premium. Everything below this midpoint is a discount level, and you want to buy at a discount and sell at a premium, okay? And if you just stick to this rule, you could have found an entry just by buying in this discount. We have this fair value gap, this order block right here. You could have also entered right here. You have numerous opportunities for an entry. Always remember also this key point. The entry is the least important thing, okay? What you have to determine correctly is your bias. If your bias is correct, and if you are able to frequently find the correct liquidity pools, then the odds are in your favor, okay? So as you can see, you can take this order block as an entry, you can take this fair value gap as an entry, you can take this fair value gap as an entry, you can take the lower quadrant right here as an entry, which is also part of the OTE. As you can see, you can take numerous entries, and every entry provides you a profitable trade, okay? So in conclusion, just write down on a piece of paper, time and price have to get in alignment. Mark out all the liquidity pools that you can find in current price action. Then look for your daily buys, your higher time frame buys. Where is price likely to draw to, and hence which liquidity pool is price likely to manipulate first to then go to your to your target. If you are still struggling to find correct buys and you still don't know how to apply ICT's concepts correctly, then check out my last video. It's an in-depth analysis of my last trade where I break down the trade in greater detail and show you how exactly I find my buys, find my entry signal, and then writing my trade to my take profit. So yeah, like the video, subscribe to my channel, and comment down below what exact strategy you apply to find your buys. I'll catch you in the next one. Be safe.